It's another opportunity to do 55 minutes of business. That's what we do here at Business Incorporated, and here's what we have prepared for you today. There's protests going on in South Africa. E-hailing drivers have some grudges. And in Zambia, they're looking at upping the production of copper. A whole lot is happening at Davos as the world meets their world leaders. Today, they discuss tariffs. Welcome to the program. I'm Ini John Mekwa. Let's start business from the global space, and we can tell you that for this afternoon, oil prices were a little changed on Thursday, maintaining the previous session losses. Uncertainty is still there over how U.S. President Donald Trump's proposed tariffs and energy policies would affect global economic growth and energy demand. Look at the numbers for this time. It's down 0.37%. $79 a barrel, while WTI, which is directly from the United States, is at $75.44 after it lost 0.51%. Broader economic implications of U.S. tariffs could further dampen oil demand and growth. And Trump has said that he would add new tariffs to his sanctions. So yesterday we heard about China, Canada. Now we also see sanctions threats against Russia if the country does not make a deal to end the war going on in Ukraine. That's the next approach from President Donald Trump. We know that on Monday he had declared a national energy emergency intended to provide him with the authority to reduce environmental restrictions on energy infrastructure and project and ease permitting for new transmission and pipeline infrastructure. He says that there will be more potential downward choppy movement in the oil market, possibly in the near term, because of the administration's, at this point, lack of clarity on trade tariffs policy and impending higher oil supplies from the United States. Still in the global space, we look at metals now. Gold prices were a little changed on Thursday also, as market participants are waiting further clarity. Still on the uncertainty around President Donald Trump's policies, trade and otherwise. Look at the numbers. Spot gold is down $2,753.14, and then U.S. gold is 0.4% down at $2,760.40. Spot silver more than 1% in the red, $31.10. Platinum also down 0.38% at $967.49. Palladium is the only metal at this time over $1,000, $1,007. After it gained 0.22%. And there are a bit of expectations there. The relative strength index is at 67, suggesting that gold price is approaching the overbought territory, which starts at 70. The Federal Reserve is meeting. Yes, that's our all expected meeting, 28th and 29th of January, amid steady economic growth and falling inflation, but is likely to face uncertainty because of around proposed policies, tariffs from President Trump. Traders expect a 96% chance that the U.S. Central Bank will keep its benchmark interest rate unchanged to reflect the uncertainty which seems to be going around with the entrance of President Donald Trump. Investors will also monitor the Bank of Japan's rate decision. That's due on Friday, and the European Central Bank's decision is due next week. But there's a whole lot of uncertainty, and is being projected that perhaps a lot of these meetings will hold rate. We come to Nigeria now, where the Global System for Mobile Communications Association is saying that Nigeria needs $360 million to expand 4G coverage to 98% of the country. The GSMA 2024 year in review report shows 4G coverage has grown from 41% in 2019 to 84% in 2024, but rural areas remain at just about 48%. The Global Telecom Body recommends policy reforms like reducing telecom taxes and eliminating right-of-way fees. which could lower the investment gap to $200 million. It's also stressing the importance of affordable 4G devices to drive adoption. For remote areas housing 2% of the population, GSMA suggests alternative technologies like satellite, and the organization says these reforms could fast-track mobile broadband growth by 2030. Not very good news coming from manufacturers. They had a meeting yesterday, and one of the information they shared with us is that the Manufacturers Association of Nigeria, that there's been an increase in the value of unsold inventory. It went up by 12.9%. From 1.24 trillion in the first half of 2024 to 1.4 trillion naira by the end of the year 2024. MAN President Mr. Francis Nishoye, who shared this at the 2025 presidential media luncheon, said that manufacturers were unable to sell their goods due to diminishing consumers' purchasing power. And of course, that's one after effect of high inflation. Inflation in the country, we know, as at November, hit 34.6%. And this, of course, translates to diminishing consumers' purchasing power and less consumption of goods. Well, we do know that a whole lot of talks are going on at the World Economic Summit. While the world seems to be having a lot of talks on tariffs, of course, brought about by President Donald Trump, trade tariff is on the lip of a whole lot of people, even at Davos, the Switzerland, the sessions going on at Switzerland. Well, today there was that session that was on debating tariffs. And right there we had the Director General of the World Trade Organization, Dr. Ngozi Okonjo-Iweala. She's asking for calm and reconsideration to macroeconomic issues. Dr. Iweala was there, of course, in one of those sessions, as well as the Commissioner for Economy and Productivity, Implementation and Simplification of the European Commission. And debating tariff is a major one coming from Davos at this time.
I just want to say, I know this debate is about tariffs, but I want to remind everyone that trade and the WTO is about much more than tariffs. The WTO is the home of agreements that could actually lead to other, let me say, adverse impacts on world trade, if they are not adhered to and respected. We house the Sanitary and Phytosanitary Measures Agreement, which protects the safety of many of the foods and so on that we trade, the technical barriers to trade agreement, product standards, so that there's trust when you trade. So tariffs are important, but trade is not only about tariffs. I just wanted to put that. The second point I want to make is that please let's not hyperventilate. I know we're here to discuss tariffs. I've been saying to everybody, could we chill also? Because 80% of world trade right now, world goods trade, is taking place on WTO terms. And world trade is at a peak, $30.4 trillion, which is higher than the pre-pandemic peak. So there's resilience. Does that mean I'm not concerned about all? No, I'm not trying to say that.
So we do have more coming from Davos. We're going to have from Afrexim Bank, the Executive Vice President, Global Trade Bank from Afrexim. He'll be joining us later on here on the show to tell us the Afrexim perspective of conversations going on there. And while we are talking about trade and businesses, let's talk to, right here in the studio, the head Product Insights and Analytics from Access Bank, Mayowa Kadri, is right here in the studio. Mr. Kadri, good afternoon and welcome to Business Incorporated.
Good afternoon. How are you doing?
Yeah, I'm good. So all these issues about tariff and all that, from President Trump to response from Europe, China, and all of that. So how do you see it? We just saw the DG of WTO, World Trade Organization, talking about what it may cost the world if everybody goes the way of protectionism, and which could mean that the world would lose I think she said about 30-40% of global GDP.
Yes.
But we see that countries are actually trying to protect themselves and grow their own economy. At least that's what President Trump is saying, America first.
Okay, so I understand him, and if you look at the terrain now, different countries, everyone, there's inflation across. So, and there's just this notion about, oh, immigrants are coming to take our jobs. So everybody's just trying to secure their locations. And I also think that there's opportunity to dialogue. He's not completely saying, oh, we don't want you in our country, we don't want to do business with everyone. He's bringing it out there to say, come around, let's engage, let's see where we can do it. But then he's more concerned with America, as he should be anyways.
I guess.
Yeah.
So in all of this, let's look at small businesses.
Okay.
What is in it for small businesses? What pros and cons can it have on small businesses?
Okay, so for small business, it is a time where you need to be very agile. And when I say agile, you have to evolve with time. Some small businesses don't have unique value selling propositions. They don't have value. They don't have what they are bringing to the table. They just want to do business. So in this time around, the best thing is to really understand your market. What differentiates you from other small businesses? Is it cost? Is it, sometimes you can even do promotions to say, oh, come and buy today, you're getting free deliveries, just to make your customers stick. And I can even paint an example. I'm in the situation where I want to build a personal website, and I talked to 3 people, right? They gave me their price point, but I'm choosing the guy that is more expensive because he's communicating. There's a value. He's letting me know. He's communicating well, he's giving me customer experience, I'm getting good value for my money engaging in. So sometimes we have to be agile, we have to just change our models, think around value. What am I giving back to customers? What am I giving back to investors? What am I giving back to the business? So that works. So for small businesses, if they can look at these key indices that I mentioned, it will take them higher and they will drive growth.
And I guess they could also partner in their areas of weaknesses.
Yes. There are different events. You can do cold emails, cold calls. Look at your space, for example. Do they have events? Meet people. Don't sell your product, sell value. When I say value, people want their problem solved. Sell the outcomes. Don't tell them, oh, you have a product that can sell at this price. No, what is this problem? What is it solving for the customers? So those are the kinds of ideas that can help small businesses in
but
this
how
period.
do you attract investors, partners that could help you if you're such a small business that's saying they don't even know about your existence? You have to win trusts, build your portfolio. And trust doesn't come easy these days.
It doesn't. So for investors with their human being like us. So what they look out for is, just like I mentioned, your value proposition. What do you have? Do you have a financials? So they can feel, oh, Adekunle is reliable. Oh, he has a financial, even though it's a small business. You can show them your cash flow. So they can rely on you. They can trust you with their money. So financials is also a part. Do you have a strong team? Are your structures, your systems, are they scalable? There's also the part where social media presence is important. Digital transformation. Are you online? Have you been engaging customers? So that also is something that could help small businesses gain trust from investors. So if they see what you want, they see that, oh, this person is serious, they can put their money on you and let it fly. Yeah.
Are you sure it's not a matter of who you know, man no man?
Yeah, that is part of it also. We have to, I don't want to sound cliche, but then it's part of it. But then I've seen people strike deals out of nowhere. I have a friend in Abuja, he's into AI solutions. So he just built one model for an NGO. What they do is different news outlets, whatever they report on, let's say, fraud. So the AI picks all of these engagements online, right? He doesn't know anyone, but it's how they're communicating the value that he has. For customers.
Talking about AI, which is also a major conversation over there at Davos, Switzerland, as the World Economic Forum. When you look at the Nigeria's reality, you talk of infrastructure for this AI adoption, technology, even though people will tell you, oh, it's all about ideas, it's not mostly about the funds. But when you look at the issue of infrastructure to be able to connect, I mean, I don't know if you heard that we're talking about 4G, increasing the penetration of 4G in the country and how much we need and things like that. How much can businesses, especially the small ones, leverage when it comes to adopting technology into their business operations?
Okay, so AI is actually expensive. Let's just be factual. But then, as a small business, you have not scaled. Maybe you just have 0 to 100 customers. You may not necessarily go the AI route, but then you are starting with technology. As simple as Excel is, Excel can house your information about financials, about your customers. And all of these AI models are already being built into Excel, likes of Excel, PowerPoint. So it still works in a way. You don't have to spend more, but you're shortening your processes and all. So it doesn't have to go the expensive route. AI can also help you at a level where you operate also.
But you know, even when it's small, you might either need to employ a personnel that will help you to do, even if it's a small one, or get educated.
Yes.
And these two are additional expenses.
Yes, of course. Yes. So the education part is also good. People can educate you maybe at a very low cost, and so that works also. That works. Yeah.
Okay. All right. We have to thank you so much for your time this afternoon. Mayowa Kadri, Head, Product Insights and Analytics from Access Bank.
Thank
we
you.
hope that small businesses can maximize the moment.
They can. Thank you very much.
All right. Thank you so much. So I did promise that we're going to have a conversation with the Executive Vice President, Global Trade Bank, with Afrexim Bank, Mr. El Mayeri. Of course, he's been there since Monday. So let's find out what's been happening. Good afternoon, Mr. Mayeri. Thank you so much for your time. So what conversations have been going on right there in Davos, especially from the perspective of Afrexim Bank?
Having me today. Yes, it's been very active here at Davos. You have a large number of the decision makers of the world meeting in one place, and it's very exciting. But you see, a lot of themes are shining. You see, one of the big themes that we're seeing also is the talk of digital and AI. It's a big topic, and even as you walk the Davos promenade, which all the houses are there, you see a lot of AI companies, AI discussion are happening, data. There's a big discussion also on health infrastructure. We see people going different topics. The other topic that's a lot of people are discussing is also the supply chain within the world, and what is the future of supply chain given the changes, and how things will shift. So this is also a big topic that we see around in our discussions with our colleague within this week that we have encountered.
Need for Africa, because sometimes it does seem like either Africans are not, or the continent itself is not recognized, or just seen as one of that last at the bottom status.
Because I think what we need to do in global forums like this, we need to unify Africa's voice. So to your question, when it comes to Africa and Davos, we've been around with a lot of discussion now on South Africa leading the B20, G20 seats, and the hosting is a lot of discussion on how can we unify Africa's voice and put Africa agenda first. And we've done a couple of meetings on this. We pushed the agenda of how can we get the world to understand African context of energy transition. For example, African 600 million out of the 1.3 don't have access to electricity, clean energy, resulting in 500,000 of death every year. How can we adjust this in the context of energy transition? Because they need energy first, and then we can transition them, and so on.
So for
discussion on Africa, how Africa is being affected by the lack of data collaboration and data exchange. We've discussed a lot with the AFCFTA, the Free Trade Agreement, how they're now working on this digital protocol, digital trade protocol, data exchange, how this will solve a lot. For example, if you want to solve the health issue in Africa, we don't have hospital data exchanges between countries. We don't know what are the prevalent issues. It's very difficult to focus people on this, but also we carried a lot of the Africa agenda within our meetings. Like we met with the Swiss government, we met with the likes of Novartis and other, and the whole discussion is how to bring R&D to the continent, how to get people to focus on disease that is not interesting for global companies but critical for the continent, and what infrastructure that we need to finance and support with to enable this agenda. So another big discussion when it comes to Africa was on how the new shifts that's happening recently in the world of supply chain and customs and the difference production center that will be affected by the changes within the tariffs globally, and how can Africa benefit or avoid any disruption. And the whole discussion was about there will be shifting in the world now. How can Africa be a beneficiary of this? How can Africa host the new change? We give a lot of examples of Rixon Bank, where we have provided a lot of companies home in Africa in our free zone area, industrial free zone area, where we typically host companies, make it easy for them to come, make Africa their home, benefit from the free trade agreement. So a lot of Africa discussion, and I think the African voice year after year now being magnified, galvanized, and hopefully we see it year on year in this global forum more heard, as we're seeing now happening step by step.
So can we expect anything new from our Flexing Bank after your interactions and conversations over there?
So several things. What we see, a lot of people with funds that want to come into Africa did not know much how a bank like us, a multilateral like us, can support them get the right entry into the continent. And we had a lot of discussion that we need to help Africa. Your funds coming into Africa, we have our own infrastructure to do the right guarantees around it, to make sure that you're not taking the risk, but you're providing the funding. There is also a big discussion that we had African banks coming back with, where on the health area, and a lot of discussion on how can we start to invest in health infrastructure. We talked to global partners, and we tried to invite them, please come, do the research in Africa on Africans, is because a lot of our medication is already tested for Europe, for Caucasian, and it might not be the same effect that we expect for our continent. So on the health side, we had a lot of discussion with the global player, and we'll bring them to Africa. On the infrastructure, we discussed a number of infrastructure projects with a number of African countries on the global scale here, and we'll continue discussion when we come back home. We already discussed with a lot of parties on solutions that we can bring to solve the data across Africa, data in general and data for health. And we have a lot of contacts with them that we agreed that later on we'll discuss. So I think very beneficial contact for us in terms of infrastructure, in terms of data, in terms of health, and sits nicely now on our agenda as we go back to our headquarters to start to execute and bring this very interesting contacts that we have encountered on the global level that have interest in Africa, but needed someone to work alongside with them who understand Africa very well, so that they can increase the impact as they go in. And we've represented Africa through Africa Collective Association, which has worked with them onto having our own sort of a house where we have partners from Novartis, from Standard Bank, and other collectively put this together so we can start to have a bigger Africa presence in Davos, which is paying off nicely of the we're going back with.
All right, thank you so much, Mr. Haytham El Mayergi, the Executive Vice President, Global Trade Bank with Afrexim Bank.
Thank you very much.
All right, let's head to the markets now. Will is not in Davos. Will is not in Davos,
This is
but
AI.
a lot of things happening.
This is my hologram.
Oh, okay.
I'm actually in Davos reporting the market like so. This is a hologram.
Oh,
and you need to recognize artificial intelligence when you see one.
I apologize.
Yeah, so I'm very well, and great to report the markets as usual. We saw very great news from the equities market, especially in Africa. We see Nigeria's NGX. Very quickly, let's look at that. We see markets trading not badly at intraday. We quickly have that on the screen. Yes, 0.19% for Nigeria's NGX. And we see that rebound from yesterday's trading session. You know, we had that 0.29% downtime yesterday. But we see also in GSC on the flip side, in the red at intraday, 0.66%. Let's look at Egypt. Let's see how they performed in today's trading session. Egypt is, however, also up at intraday 0.45%. And we see Kenya's stock market closing in the red after, successive days of positive closes. Right now, they're beginning to, feel the pinch. I think their debt profile is beginning to impact, investor sentiments there. So 0.08% for Wednesday's close. Let's see how today turns out. But before we delve into the Middle East, let's just turn our attention briefly to the fixed income market. We had that NTB auction yesterday, that's Treasury bill auction in Nigeria, and the results are out, and total offer we saw was about 530 billion naira. And there was an oversubscription, settled at 755, over 755 billion naira was sold by the central bank yesterday. But Caleb Alimi, Chief Dealer, Providence Bank, joins us virtually with more insights into this. He's going to give us what happened and break down these details. Good afternoon, Caleb. Caleb, I just want to know very quickly, if you can hear me, what does the oversubscription tell us about liquidity levels in the market, especially when we compare it to this same period last year?
Thank you for having me, Will. Good afternoon. The oversubscription, largely about liquidity, just tells us market is a bit more liquid. It doesn't say much about, whether investors are really interested in the paper. And what we find is that you found that the range of bids was from 21% to 28%. So a lot of those bids could have been above 22, 23%. For DMO to have sold over 700 billion and still kept the rates low compared to the last auction, it shows that it wasn't really a liquidity play, it was a demand kind of thing. We had a lot of demand, but at a lower level. Compared to this time last year, it also shows that the DMO is ahead of its borrowing program. This time last year, they had raised just roughly around 288 billion, just under 300 billion, as at two auctions into the year, and they have raised it at a maximum level of around 11% or 11.5 or thereabouts. However, this year, they've raised over $1 trillion, and they've done that at a maximum rate of around 22%, 22.6%. And that's largely because, last year as well, between January and December, the monetary policy rates, MPR rates, moved from 18.75 at the beginning of January to 27.5 at the end of the year. So that all of that has played into where we are today, as in terms of interest rates and in terms of expectations of customer appetite for treasury bills.
Okay, so seeing what the CBN has done in terms of MPR, how does it yield on T-bills compared to other fixed income instruments? And what impact does this have on investor behavior right now? You said not much appetite, but we're seeing this oversubscription. How does this impact on investor behavior?
Well, investors will continue to invest their monies in these instruments. We call them risk-free instruments. How do they compare to other fixed income instruments? You're talking about maybe commercial papers from the private sector, and then government bonds as well, which are the longer end of the curve. Compared to commercial paper from the private sector, obviously there has to be a premium on the risk-free. So it is lower than what commercial papers are offering from other corporate borrowers, obviously because the federal government instrument is seen as a risk-free instrument, and then there's a risk premium that investors would demand when investing with other private sector individuals. Compared to federal government bonds, obviously the long end of the curve is also now trading interestingly around the short end of the curve. So the curve is some sort inverted, where you have 1 year treasury bill doing a yield of 26, 27%, and then you have a 10-year bond also yielding about 21, 22%. So you have an inverted yield curve. And that simply tells us that a lot of people are betting on the now versus the future. So they rather just take their bets now for 1 year, watch their investments, rather than go lock into longer term investments.
Okay, since we now have this inverted yield curve, do you expect yields on treasury bills to rise or fall in the near term, given the current borrowing environment is quite aggressive by the federal government?
So yes, first of all, the deficit this year for this year's budget is larger than the initial deficit for last year's budget. Last year's budget started at an initial deficit of about 8 trillion. This one has started at around 13 trillion. So clearly there's a larger appetite to borrow. However, we also still expect that should there be a revenue target miss, the government will have to borrow much more. However, what we have this year that we don't kind of have last year is the stability in the FX rate. FX rate has stayed around the 1,500 handle, 1.5 handle for a while. But we didn't have that last year. Last year we had a lot of hyperventilation or hyperinflation in that exchange rate space, where Naira moved from around 750 to around 1,700, 1,800 within a short period of time. But what we have this time, we have that stability. And so we may not see a desperation from the central bank to attract foreign portfolio investors with high interest rates, but we do expect that given the size of the deficit, interest rates will remain elevated around this levels for the rest of the year. However, come February, when the MPC meets, it will review the inflation data, and then they could decide to channel the interest rates in a different direction. We don't expect to see aggressive hikes this year. We don't even expect to see any hike this year. Best case scenario, worst case scenario, we expect them to maintain NPR at 27.5, and that will determine how interest rates will move for the rest of the year.
Okay, but it's funny you mentioned hyperinflation. The Financial Reporting Council thinks otherwise, but Nigeria is not in that situation. But so far, back to the business, about 1.2 trillion naira has been borrowed so far this year. Now, given the total debt of about 142 trillion as of September last year, there are concerns about debt sustainability here, Caleb. Do you think the high demand for T-bills could encourage the government to overshoot its borrowing plans? And if so, what consequences are we looking at here?
Yeah, so the interest from consumers will not determine the borrowing appetite of the government. What will determine their borrowing appetite is their spending plan and their revenue target. If they reach their revenue targets, for example, if we begin to produce 2 million barrels of oil per day, then they would need to borrow less. If subsidies that have been removed do not get reinstated or do not get reintroduced, they have to borrow less. So the less they have to borrow, the fewer the instruments they will issue. But the more they have to borrow, then they would have to continue to ramp up, and then that'll be to the benefit of the investor, so to say, because at that point, if you're borrowing more, then there has to be a higher price to pay.
Okay. Thank you so much, Caleb Alimi, Chief Dealer, Providence Bank, for your perspective. Great to always have you on the program.
Thank you for having me, Will.
So let's look at other markets now. Major stock markets in the Gulf were mostly positive, as in Africa. Good news for them, though. At intraday, we see Abu Dhabi, that's Abu Dhabi trading 0.13%, and Dubai also in the green, 0.35%. Let's look on the flip side, Saudi Arabia and Qatari indexes. Saudi Arabia is the lone gainer here. We see 0.05% down, and Qatari index is up 0.38%. Now to the U.S. Futures were little changed early today, with Wall Street on the verge of new record highs. Now, the futures for the S&P 500 slipped around 0.2% levels, as you can see now, and the Dow Jones Industrial Average futures ticked down 0.02%, while NASDAQ 100 futures lost about 0.49%. Now, there's a calm that's back in the markets, especially for futures, after Wednesday's trading session that saw the S&P set an intraday record high on Wednesday. Now, the stock market in the U.S. is getting a boost from excitement about potential tax cuts and deregulation under President Donald Trump. Now, the fourth quarter earnings season is also there. It's off to a strong start now, with Netflix climbing more than 9% in yesterday's trading after reporting a blowout quarter. Talk about earnings. Now, reports from GE Aerospace is also expected. American Airlines, we saw that report coming down, bad news for that. Disappointing reports coming from American Airlines. But let's see how Asia markets traded at the close of business today. We saw the markets closing let's look at Asia markets very quickly there. We see Nikkei in Asia 0.7% to close the business today. We see Kospi in South Korea 1.24%, Hang Seng down 0.4%. The markets are pretty down especially for Asia.
A lot of
looking at especially with the policies coming from Trump and expecting that policy regarding cryptocurrency, the executive order.
All right, Will. Thank you so much for that. All right, now, well, it's day 4, commissioning of projects in the Federal Capital Territory. That's where we're going to now. That's if you're watching us on our DSTV platform. It's the construction of asphalt carriageway from Garage Junction to LEA Secretariat. It's a 5-kilometer road within Kuje Area Council. And that's where our DSTV viewers you'll be going for that launch at this time. But of course, on our other platforms, we're still here on Business Incorporated. If you're watching online and you want to continue watching Business Incorporated, just switch to the second stream on YouTube and you would see us here. Now let's head to Berlin. I guess the major topic there is not different from what's going on in other parts of the world. Political and business leaders are there at Davos. Richest people, last chooses to call them world's richest people, are meeting there for that economic forum. And once again, the ski resort town way up in the Alps has transformed into the center of geopolitical and economic world. Lars has details, at least from the perspective of Berlin. Hi, Lars. Good afternoon.
Hi, Ini. Good afternoon to you. Yeah, let me tell you a little bit about Davos. There's a lot on the agenda there this week. It's always like a week-long meeting. And let me just start with the main topic that's on the Davos agenda every year. It's the fight against global inequality. Now, every year we're getting the latest numbers from non-profit organization Oxfam. This year they're reporting that inequality was once again on the rise and that the rich are, of course, again getting richer. In 2024, the world welcomed another 204 new members to the Billionaires Club. There are now 2,769 of them, and their wealth, believe it or not, on average grows by $2 million a day. Now, 10 of these billionaires would actually still be billionaires even if they lost 99% of their wealth overnight. Now, at the same time, Ini, hardly anything has changed for the world's poor. There is no sign of the fight against global poverty really getting somewhere. It might make you feel like you want to reach for that pitchfork back in the barn. And the world's richest people, they know it. There are some of them who are at least trying to change the dynamics here. 370 millionaires, now we're talking a bit lower here, have been writing an open letter to world leaders meeting in Davos that is calling for higher taxes for the rich, because many of them actually know that the level of inequality we're seeing around the globe is not sustainable and actually threatens the stability of global markets too. But anyway, we're hearing pretty much the same every year in Davos and nothing ever changes. So once again, this is likely mostly talk and not necessarily followed up by any action.
Last, I guess we have to try and be part of that world's richest. Hopefully this time next year when they're meeting in Davos, you and I will meet there. And then we can also tell our own side of the story. But I mean, apart from this, we know the issue of tariff is also major there in Switzerland at Davos. But what else are they discussing about global development?
Well, yeah, Ine, you're exactly right. It is not at all surprising that this second presidential term for Donald Trump is front and center, especially because of tariffs, since we obviously know Trump has at this point threatened half the world with tariffs and trade wars, and that includes his direct neighbor countries, Mexico and Canada. It includes China. It includes India. In fact, he's been talking about 100% tariffs on all BRICS countries as well as of late. And of course, he's also been talking about tariffs for the EU, and that is what most people are debating right now. But interestingly enough, Ini, with some optimism, European leaders are at least trying to face Trump with a projection of their own strength. Instead of arguing with him or just complaining about him, they are trying to make their own points. And that includes a potential gas deal with the EU buying more liquid natural gas from the US. in an effort, first of all, to shore up its own demand, and of course, second, to placate Trump and get his mind maybe off tariffs, at least for a while. Now, EU Commission President Ursula von der Leyen has also mentioned the goals of making the bloc more competitive in general, with lowering bureaucratic hurdles and investing heavily in clean energy and infrastructure. Sounds a bit like the EU might work on its own Green New Deal, the way the US successfully did under Biden. So Trump is front and center in Davos. He is not personally there, but he will be there on a video conference, giving a speech and then also later answering some questions. But be it as it may, EU leaders are doing their best to project strength.
Yeah, Lars, I think talking about Trump and tariff, the most surprising part is actually the threat of tariff on Russia. I know that is going to be a big deal in the coming days. I guess that's his own way of trying, to stop the war in Ukraine. But we'll see how that goes. Meanwhile, let's see what investors are doing intraday.
Yeah, what's happening in markets today is really getting weird. I gotta be honest with you. The DAX is up again today, if only by 1/3 or 0.5%, depending what time we're looking. German blue chips are pretty much in a rally, unlike anything we have ever seen before. But for days now, when you look at the headlines in pretty much all the newspapers, business websites, it feels like they're getting pretty repetitive, usually saying something like DAX rally continues, but for how long? We have more and more analysts outright warning that markets are way overbought. I mean, we're up 7% since the beginning of the year. That is 7% in 3 weeks. Unbelievable and definitely not sustainable. Add to that, of course, the environment that we're currently in, a weak economy here in Germany, elections coming up, Trump threatening tariffs, the EU trying to find a common course. It makes no sense to see markets that strong. So we will see a correction at some point for sure, but I guess not today.
Yeah, not today, Lars. Well, thank you so much for that update.
Thank you, Ini.
All right, now we need to take a short break. But before that, to tell you, ongoing, the Nigerian Economic Summit is holding its economic outlook even as we speak. And a major news coming from there is that they project that the GDP will grow by 5.5%. Very, very optimistic coming from the NESG there. And they say this is on the back of sustained reforms. So perhaps the benefit of the pain from the reforms that Nigerians have been looking for may be in this year, 2025. That's based on the projection of the NESG. We'll give you details of that subsequently right here on Channels Television as we are there at that event. You get full gist of it. But for now, let's take a short break. When we come back, we'll give you more stories from the African continent right here, Business Incorporated. Stay with us. Welcome back. It's still Business Incorporated on Channels Television. We head to the commodities space. Today we're looking at sugar, and the total demand for sugar in the country stands at about 1.5 million metric tons. And economists expect average price of sugar to, guess what, decline by 6.8% this year, 2025, after it dropped by just about 13% last year. I wonder why, what's driving this decline in the price of sugar? Is it demand or otherwise? Well, we have Teva Kumeka, analyst with Financial Derivatives Company, joining us virtually from Victoria Island. Teva, good afternoon. Sorry about that, about your name. Well, I mean, it's a pleasant one, if I could say that, when we hear reduction in prices, but it's also puzzling. What's driving this decline in the price of sugar?
Yeah, good afternoon. It's okay to miss the name, but you got it. Yeah, that's fine. Yeah, and what's happening in the sugar markets? We've noticed some trends, both globally and domestically. At the global front, we've seen supply glut in the sugar industry by the top two sugar suppliers, which are Brazil and India. So, now what is motivating this increase in supply of sugar? Remember, since Donald Trump was elected in November and his ascension to presidency in the United States, the dollar has strengthened. So the dollar strengthening against other currencies, there's a motivation for or an incentive for domestic producers of these commodities to export, so in order to gain forex. So that has really increased the price of sugar and the quantity of sugar in the market, which has dragged the prices of that commodity down. Domestically, we've also seen stability in our currency, in naira, in the forex markets. So this stability, because sugar is mostly imported into Nigeria, because of the stability in foreign exchange, then the import cost has come down. So because of that, that has trickled down to the drop in the price of sugar in the country. This also has a knock-off effect on inflation. You will notice that food inflation dropped in December from 34.93 to 39.93 to 39.84. I beg your pardon. So this all this take into play while the price of sugar is coming down.
But you mentioned there how Nigeria is heavily dependent on importing sugar, and this is in spite of we've had master plans and policies that's supposed to drive domestic production of sugar. Can we say those plans have failed?
Yeah, the plan has not failed. The master sugar national sugar master plan has not failed. It is very effective. But what it simply means is that as of now, we're not producing as much as we're supposed to produce. According to our records, we import about 96% of what we consume. So we are still much more import dependent on sugar. So even though there are big players in the market who are trying to ramp up production, but there's still that gap. So in the short term, we are still going to be importing until we improve our domestic production. And there are factors that affect this domestic production, which include we have infrastructural challenges in terms of irrigation, in terms of logistics, and weather also affects this stuff. So the production is not reaching the level that we consume this commodity in the country. There's also the issue of arable land. The arable land is also competing for other commodities which are produced in the country. So we have shortage of arable land and the cost of domestic production. All these things are factored in why we have not reached self-sufficiency in terms of producing our domestic sugar, able to take care of the domestic demand.
Trevor, thank you so much. And we know that there's also been the same taxes, sugar tax, and all of that. I wonder how that's going. But thank you so much for giving us this analysis this afternoon.
Thank you very much for having me.
Now let's head to South Africa, where e-hailing drivers from across Gauteng have gathered at West Park in Pretoria, and they're protesting the impoundment of their vehicles. Their drivers operating on Uber, Bolt, and InDrive platforms took to the streets to express their frustrations. They plan to hand-deliver a memorandum of demands to the municipal leaders. And Tuashen Metro bylaw stipulates operators without valid permits issued by the Provincial Transport Department face having their vehicles impounded and paying hefty fees for their release. In a statement released 2 days ago, the city of Tuasheng claimed that it was making progress in finalizing a bylaw designed to streamline operations for e-hailing drivers, and this includes regulating such services along metered taxis, as well as developing transport assessment guidelines to create a safer and more efficient working environment. Zambia's copper production is up 12%. That happened in 2024. It's now at approximately 820,000 tons. That's up from 730 in the previous year. According to Mines Minister Paul Kabuse, this increase is attributed to the recovery of production at major mines. The government anticipates that the sector will bolster economic growth in this year, 2025. Not looking very good for Kenya. A survey by the Institute of Public Finance indicates that Kenya remains at high risk of debt distress after breaching all IMF debt sustainability ratios. The report recommends reduced borrowing and taxation in this year to rebuild fiscal buffers that will recover the economy, which slowed in 2024. Kenya's public debt inched closer to 11 trillion Kenyan shillings as President William Ruto's administration continued its borrowing spree. Let's see, perhaps Kenya can have a little bit of buffer from the crypto space. I don't know if Vladi has some Bitcoin. You have some Bitcoin to help Kenya.
With countries buying Bitcoin now.
Oh my God, this is so red.
Yeah, so if you're a country buying or maybe bought at $106,000, then you're definitely in loss at this point, and that might not be the buffer you're looking for.
Obviously.
2.93% down. It's mostly red on the board today. Countdown till tomorrow, Friday. Maybe it might be a red Friday. We'll definitely find out. Let's look at some of the top headlines now. $124 million worth of XRP, that's hit Binance Exchange, and investors are wondering what's going to happen with that. Is it going to be sold, or is it, well, when you send to exchange, definitely you're trying to sell, but who knows what's going to happen. Then Trump's crypto executive order, that is coming. Investors are bracing for the executive order for the crypto market. That's supposed to be in about 5 days. We'll see if there's anything positive right there for cryptocurrency. Then we see Taiwan is set to integrate crypto into their economy in 2025, allowing banks to hold cryptocurrencies. All eyes on that country there. But let's get a check on what's playing out now. Let's Sheon Dania joins me now. He's the CEO, Alpha Geek Tech. Join me via Zoom. Hello, Sheon.
Hi, good afternoon.
Good afternoon, Sheon. So everyone's looking out for what Trump has in store for the cryptocurrency industry. The executive order, that's on the mind of investors now. What are you seeing?
Yeah, pretty much. What I believe would happen is there'll be more regulatory clarity, and coordination. Because with the Trump's executive order, it has focused to focus on clear regulatory framework, for cryptocurrencies. Even though it might still feel a little bit patchy, but I'm sure that the SEC with other agencies will start working, very well to see how they can properly regulate and make sure that this works. And I think also there will be a lot of support for innovation in this with the executive order, and we will start to see a proper drive towards central bank digital currencies, which is sort of like a standard US-based cryptocurrency on the blockchain.
Right, and post inauguration day, we're seeing Bitcoin there not looking so exciting at this point. I guess it's a sell the news event happening.
Yeah, prior to the inauguration, everyone was very bullish on Bitcoin, of course, expecting that there will be a lot of conversation around cryptocurrencies from the president's speech. However, because we didn't get that, before the inauguration, Bitcoin had soared to about 109,000, which was driven by the optimism regarding, policies. However, since we did not get anything directly on cryptocurrency in the inaugural address, then the market had to correct. So as of right now, I think Bitcoin is trading around 102,000. We will see, and same things, Ethereum, XRP, all of them, we see that they all went up, and towards this weekend, we're beginning to see a decline. That might also be associated with the Chinese New Year coming up, but we believe that the sentiment is, a little bit biased. We're waiting to see more actions or more, declarations as to where the administration plans to go with cryptocurrencies.
Right, and talking about the administration and the family meme coins from Trump to Melania, are those coins going to zero, or will they somehow make some kind of comeback?
So, as we all know, meme coins are jokes. They're not. They don't hold any value. They don't claim to solve any real world problems. They do not claim to do anything. They do not claim to be building any projects that will last a lifetime. They're just jokes. I mean, of course, even though people do not joke with their money, but there's a high potential that after some time it will lose some steam. Most of the meme coins that are still surviving today are driven more by community activities, because most of the time they hand over the coins, the contract of those tokens actually revoked by the developers and then handed over to the community. So depending on community action, if community decides to keep pushing the coin, it will stand the test of time. If not, it will go to zero. And let's not forget that this is not the first time there have been meme coins associated with Donald Trump. So it will be good to actually check what the previous meme coins associated with him are doing right now to be able to see or determine the future of what we have now.
Right, I guess we can just call it an asset that's backed by the leader of the free world. Well, thank you so much, Shehu Dania. Always great having your perspective.
You're welcome. Thank you for having me.
Yeah, so we talk about assets backed by gold, backed by different assets, but this one is backed by Donald Trump.
Do you think Donald Trump is under pressure now? Markets are waiting for him, his policy in Davos, his tariff, based on what he
I'm sure he might be feeling, some kind of pressure at this point.
Everybody.
All eyes on Trump. Yeah, maybe some kind.
Yeah, but he can handle it.
He should be able to handle it.
All right, so that's it on the program today. Thank you so much for being a part of Business Incorporated. We have a final one tomorrow, and we do hope to have an exciting time also. But before then, I'll see you tonight for the Stock Market Report. I'm Ini John Mekwa. Enjoy the rest of your day. Bye.